Today, we'd like to welcome Ruth Irwin with On the Money to talk to us about financial statements. They really aren't as scary as you think. Tell me more about what the income statement tells a business owner.
Okay, so a business owner is going to look at their income statement. They're going to see their revenue or their sales, and then they've got their cost of goods sold. And the cost of goods sold, if you look at that, materials and subcontractors is the primary piece of that. And then after you take that cost of goods sold away, you're going to get a gross profit. That's not the profit number you're going to look at when you say, my company is profitable, because then you have all these operating expenses. And operating expenses are things like rent and payroll and software. Those sorts of things go as operating expenses. And then you get down to that net income line. One thing that I like to do with clients is do trending with income statements. So you're looking month after month or year over year to take a look at what's actually changing on your income statement.
So let's go through an example and go through what a profit and loss statement shows.
Okay, again, very basic, like we talked about in the last slide. In this case, we've got a revenue of $600 million, and this company's cost of goods sold is $360 million, leaving a gross profit of $240 million. Then they spend $150 million on their operating expenses and $10 million on taxes and interest, coming up with a net income for the period of time of $80 million. Now, I think go ahead.
I was just going to ask you that sometimes people say, okay, we don't have cost of goods, we have cost of services. And that gets some people confused, but where does that go?
Well, I'll use a simple example as my firm. We have cost of services, right? It's what I'm paying my accountants to do the work. But that's a cost of service, as opposed to if I'm making a widget and I have materials involved there. So that's the difference there.